So there's a lot of financial advice online, which is great. I think people need to be financially educated, especially in the US. But there's also a lot of faulty advice and a lot of advice that is just too generic. Personal finance is supposed to be personal. So it's hard to put blanket statement or blanket strategies out there without giving any type of context. A perfect example of this is when people say, the first thing you need to do to be financially responsible is to pay off your credit card debt. Yes, we do know that we need to pay off our credit card debt. How? See, the reason people are in credit card debt is because they cannot afford to live. If you live in a big city, let's say New York City, Miami, London, cost of living is out of control. Unfortunately, salaries have not kept up with demand. And people always like to talk about this 100K a year, 100K a year. If you live in New York City, 100K a year, it's a great salary, but it's also not that much money. So 100K a year, it depends where you live. So to say you need to pay off your credit card debt, we know that. The question is how. The only way to figure out how is to do a deep dive analysis of each person, which you cannot do in a video. One size fits all advice doesn't fit anyone. I remember seeing an interview with Kevin Hart, and he said that every time he gets paid, he puts 50% away to cover his potential tax bill. And that's cool because he makes $50 million a year. It's easy for him to live off half of that. But if you make 80K a year as a small business owner, you're going to put 40K away and live off 40. That's not reasonable. Sure, it's great to listen and get some kind of strategy, but also the strategies are very, very oversimplified. And for the most part, they don't even apply to you. To say like stop buying coffee or stop buying avocado toast works for some people. For me, that was coffee. I spent a lot of money on coffee. I think it was like $1,000 or $2,000 a year because I worked in an office. I was buying 3-4 coffees a day. I'm in the office 5 days a week. It adds up. So I fixed that by buying a coffee machine. So now I'll make my own coffee. But that's not everybody's case. A lot of people spend most of their money on housing, especially if you live in a big city where rents just keep going up. And why do the rents go up? Because a lot of people want to live in those cities. So the landlord is going to do what a landlord does. He wants to make money. So that ends up hurting people because all their money goes to rent. So how do you tell someone who spends 80% of their salary, 70% of their salary on rent? How do you tell them to stop buying coffee? And also when people say that so many people are living paycheck to paycheck, a lot of these people are doing something called zero-based budgeting. It basically means if you make $5,000, that $5,000 gets allocated somewhere. So maybe $2,000 for rent, $1,000 for groceries, $1,000 for savings and retirement. You actually saved money, but that total salary of $5,000 was allocated somewhere. These people are not living paycheck to paycheck because they're saving a part of their salary. So when people say paycheck to paycheck, people falsely assume that if my entire salary goes somewhere, I'm living paycheck to paycheck. No. If you have a savings account or money stashed away, you are not living paycheck to paycheck. There's also a lack of context. So a lot of people will say to invest in an index fund, but they won't tell you which type of index fund. And they also won't tell you how to invest in an index fund. For instance, should you invest to your retirement account so you can get a tax break? Or should you invest to a regular brokerage account, no tax break, and you pay taxes on the gains in retirement, just like a regular retirement account? Retirement account will at least give you a tax break up front. So what's the best way to do that? It's hard. It depends on your salary. It depends on your goals. It depends on, your expenses, how much money you're able to save every month. And financial goals are not universal. I was working with a guy a couple of years ago, and he said he just wants $500,000 in cash, and he would move to the countryside somewhere in middle America. He had a kid, he was married, and he said, that's it. I wouldn't have to work anymore. I would be able to stretch that money for the rest of my life. And he was like 37 at the time. That's not the life I want to live. Everybody has different goals. For instance, for me, I want to live in a big city with a big airport. Why? Because I hate doing layovers when I travel, and I love to travel. I want to be able to fly anywhere I want, direct. Not many cities give me this option. You're talking New York, London, Dubai, maybe a few more. So that's the kind of life I want to live. And some people want the complete opposite of that, and it's fine. But once you figure out exactly what your goals are, you need to set out a plan and figure out how to get there. Do you want to live off of $500,000 for the rest of your life in middle America? If you do, that's great. But if you want to live in a big city, you're going to need more money than that. Another one is something called the 50-30-20 rule. So they say that 50% should go to your needs, rent, utilities, right? Things that you need to live, groceries. 30% should go to your wants, maybe a new pair of shoes, things of that sort. And 20% should go to savings. Majority of people cannot afford to save 20% of their income. We know we need to save 20% of our income. The question is how. The only way to figure that out is to do a deep dive analysis of each specific person and figure out exactly what they're doing with their money, how much they're making, optimize for how they can make more money. There's no way that you can throw 50, 30, 20 rules at people and expect them to benefit from it. It is too generic and too broad. And a lot of these YouTube creators have money, so it's easy for them to put away 20% of their income. And let's say you can put 20% away. Do you put it in a retirement account and get a tax credit, or do you just put it in a savings account, earn interest, buy stocks for a brokerage account? What exactly should you be doing? The best way to get a handle on your finances is to do a personalized coaching or ask friends who are successful, or just do research on your own. I've been an accountant for years, so I have experience in this industry. My job forces me to be good with money, so that's one way. But if you don't work in the finance industry, it's going to be a little bit harder. So